Happy Monday, everyone. Welcome to our weekly macro update. Today, we're very excited because we're going to start the week with about 3 sessions. So we're going to start now with Tim on the macro side. Then we have a session in a couple of hours with Dan. We're going to go over some backtesting results from last week. Last week was obviously probably one of the craziest week we are going to witness in our lifetime, or maybe we're going to see more, but let's see. And we're going to go over some data-driven results. And then for our premium members, at 2 p.m., we're going to have some live trading. So if you are a premium member, stay tuned. We're going to do some live trading today as well. But for now, welcome, Tim. Nice to see you.
Yes, good morning, ladies and gentlemen. Nice to see you. And yeah, if you are done, Fabio, let's jump into it.
Let's go.
Yeah, where do we start? As always, with a little recap of the last week, you are seeing an ES chart here on the presentation. And yeah, crazy week. If you survived it, if you make money, congratulations from my side. Nothing that easy to be done. If you are a day trader, those fairly big, trending, not trending moves intraday, as we had on Monday. I mean, it looks kind of small on the chart, but if you compare it to the scale on the right side, those are easily like 50 points, so 200 tick swings up and down in like 15 minutes, half an hour, right? That's can be terrible for you if you're not used to it. And I think the majority isn't, because a market like this really never happened since the last 5 years. If you are participated in the markets in or during the COVID crisis, name it like that, it's not new to you. But for me, started in 2019 with trading, was still a rough week. Not that many hours of sleep on the day, because I also waited for the futures open every day in the PM. And was kind of interesting to keep track of the recent developments. So last week, gap down on Monday, all this tariff stuff, Asia selling. I'm pretty sure you guys watched the news and you are already heard a lot of stuff about it. Tuesday, one of the biggest intraday reversals in inside day, right? Where the index is trading basically spoken in value from the last day, was like 5 or 6% down. I took this trade here on Tuesday. It was one of my only trades in ES this week, because the other stuff was a little bit too sinister. And but the highlight was on Wednesday with the announcement from Donald Trump. First in the morning, it's a good time to buy, right? Which is kind of nuts. But later in the day, we had the 90-day delay in tariffs, which gave us nearly a 10% gain in ES futures. Over 10% in NASDAQ futures was the third biggest intraday gain for US index since the GFC in 2008. And first day we had CPI, but in this environment, usually no one cares about those numbers, right? Kind of a reversal, like 5-6%. But we ended the week green, viewed from the Monday lows, with Friday's PPI, but also pretty not a data set that the Wall Street is looking at. In the moment, it's of course all about volatility. If you're watching stuff in the bond market, also long-term yields are kind of correlated with ES futures, or have been correlated last week. So those bond yields are going up, especially in the long end. People try to find out what's the driver behind it. It goes from the usual social media yapping on X or whatever source you are using. It goes over to the more professional services like Bloomberg, Reuters, all the stuff. Some say it's China, because it's kind of obvious that the selling mostly happens in the China/Asia Japan session. But from my side, always hard to figure out who does this, right? You need a little bit more of insight in a chart to doing this. The only fact that matters, in my opinion, is a few weeks ago we have actually spoken about those developments that have been taken place this week and the week before this week, that if bond yields are going up again and we have this kind of whipsaw environment in stocks, it's a bad sign actually, right? So I didn't expect it happened that fast, but yeah, we have spoke about it like 2 weeks, something like that, I guess. And yeah, in the bond market as well, I had some trades last week on Friday in ZB, and it's kind of nuts intraday trades in ZB futures, and you can make like 50 ticks. That's huge. The actual bond volatility measured in the move index, pretty high. Of course, there's a lot of selling. Move index nearly in the 130s, pretty high for this asset class. And yeah, as you can see in the chart here, with in red the bond yields, those trend days where they are going up hours and hours, there was always some kind of selling pressure in the S. So yeah, it's a correlation still watched from my side. Today we are seeing some kind of relief for the bonds. The long end looks a little bit more better than the short end, but they are not playing the movement that the equity futures are playing in the morning, because it was a kind of news driven from the weekend. The usual tariff chaos kept us busy also on Saturday and Sunday. Because we can't have nice things these days. But we got some relief for tariffs out of China. I'm pretty sure you guys have seen the news everywhere, so I won't go into that much detail here right now, because this stuff is, it's like soft sentiment data. It can change so much, and just focus on the data and focus where a trade may be in this information. So week ahead, as always, the economic data is kind of boring. There's nothing big mention worth. Weekly unemployment, as always, sure, we can watch this, but it's earnings season kickoff today in the morning. We had Goldman Sachs, they did pretty well from what I have seen. Tuesday later, Johnson Johnson, BofA, Citi. Then on Wednesday, Jerome Powell has a little speech, Economic Club of Chicago. Sometimes people are watching a little bit of side quest commentary from Jay Powell in those events. If I remember, like 2 or 3 years ago, sometimes we had this where he dropped a little hint about the recent developments in the markets. But just as a side note, if you are a day trader and have trades on Wednesday open in this environment where liquidity is pretty sluggish, and you still have a wicks in the 30s, maybe pull your trade off, or just watch it a little bit how the markets are moving. Earnings on Thursday, United Health, Netflix, that stuff. I usually watch the stocks they are most important for the index they are in, right? Like in Dow Jones, United Health. Quick check what's going on over there. But I'm not a big stock guy. I'm not doing earning trades or something like that. But sometimes there's some good information in this as well. The next topic for this week is the ongoing dollar weakness. We talk later about it a little bit, but just for this slide here, also as a reminder for me that I'm not forgetting this topic to mention it next few slides. Hedging demand is going up in the dollar. That's data out of the options market. As of now, I'm not sure what index Bloomberg is tracking here, but it should be the dollar index, which is trading below 100 this week. Usually, of course, a big PSYOP number, right? Because it's 100 and we have not seen the dollar index since a few years down that much. Most of the drop down to 100 was initiated on the Tariff Liberation Day, where Donald Trump put out his tariff news in front of the White House. And other thing to mention, on Friday we usually have OPEX, 18th of April, but it's the exchange holiday, so it's on Thursday the 17th. So we have on Wednesday the usual expiration, and on Thursday the 17th OPEX expiration, right? And what's always important in a market like this, whatever comes out of your newswire or the stuff you are watching, with tariffs, announcements from Donald Trump, also our well-beloved friend, Mr. Lutnick. So there can always be some kind of surprise. Volatility, one of the main drivers in this market, of course. Just think about it. If stuff is uncertain and no one really knows what happens next, and people are start selling, whatever the reason is or whatever the reason was, of course, volatility goes up, right? So most important asset class you should watch over the week to gain a better view into this. And a few charts over here. The left one on the upper pane just shows some gamma exposure on different levels. We can still see 40 as some sort of interest. As of now, VIX is trading 33.08. Those are lows from Wednesday. I always watch VIX not with technical analysis, right? It doesn't make sense. So if I say we are trading at lows from Wednesday, it's some sort of timestamp what happens in the market over there. And this was actually the low from Wednesday. And if we remember, Wednesday was also the day where we had those big pump because of the news that have come into the market from Donald Trump, right? So it's some sort of timestamp. If we are going below 33 in VIX during the open today, can tell you a little bit more of the direction we may be heading into the current session right now. 1 month Q for VIX, of course, pretty call bias. It makes sense, right? People still not dropping their volatility or downside hedges in the market. And now you have new developments, new stuff for the market, like the just 20% tariff stuff for all the tech things that the US is importing, and didn't have checked some stocks. But if you are looking pre-market, Apple is up 6%, AMD 4%, Nvidia 3%, Tesla 1.8%, Meta, right? So of course that's something new, right? But if you have still short trades open on this stuff, also short trades open in the index, it causes pain for you. And maybe a little bit of vol crush is incoming. But if we are remember that on Friday the VIX close was 37 and it's 33 right now, it's just 4 points. It's not that much. So don't be that comfortable in this market, right? You can easily see a VIX higher today. It's also due to the reason, if we look at the smile curve on the right side, the green line is actually the Friday, and it shows you the implied volatility per strike. Below 40, it's still pretty high, those implied volatility. And long story short, there is still demand and supply for those options, right? So volatility should be staying kind of active. And if we compare those shocks to other shocks like last year in August, where the infamous carry trade was a little bit in trouble due to the Bank of Japan. We have seen those massive vol crushing trades. It should not happen in this environment, right? Also, a little bit more damage has been done with all the tariff stuff and all the bond selling, and the yields are going up and the stock market is down. And long story short here, it's not like you have a VIX on the day down like 20 handles, right? I'm not in the camp that this will happen that much and that any soon. Of course, if the uncertainty in the markets will vanish, this stuff will go faster. But also keep in mind, earnings session is ahead, and usually people want to say that the companies are still beating expectations later, like 2 or 3 weeks, especially for the big tech ones, right? It's kind of important. So there should be some decent opportunities in volatility from my side. Speaking of volatility, most of the time we are speaking about equity volatility, sometimes also commodities, but the FX market can also give you some opportunities these days. Why is it like that? Because all the stuff is going on with the trade war, of course, affects FX markets as well, right? Keep in mind, the currency of a country is always a little bit of the mirror how the country is doing. Some countries have a deficit in exports or imports. This is pretty important for the underlying country, for the currency that you are watching, right? And if we are looking, and I have to open my chart as well because it's too. So this chart, the right one, shows you the major FX pairs with the futures, so the 6S, 6E, 6J, yada yada, but also on the low performers like emerging market FX, like the Brazilian real and the South African rand. Our recent outperformer since the beginning of April, and it's a good timestamp actually, because the major announcement was in this week from Donald Trump during the White House conference. It was on the 2nd of April, so I choose this time frame from the beginning of April, and the big outperformer was the 6S, which is the Swiss franc. Usually it's first of all, the currency from Switzerland. Switzerland isn't a country that's producing anything meaningful or export commodities as well. It's not like that. Maybe chocolate. They are doing pretty good in chocolate, but that's not the case here. Not the point. Usually it's get bit to this extent that we have seen since the month when equity markets are not doing this well. And you have a so-called flight to quality, and you are seeing risk on. So people hiding in more stable currencies. So this goes for the Swiss franc, but also goes for the Japanese yen. It's a little bit weaker on the Japanese yen because we have also new stuff since months or like 1 year in Japan. That is kind of important. Keep in mind the Japanese central bankers are also talking about rate hikes. They also did rate hikes, right? It's a little bit more dodgy, but the Swiss franc, the 6S, is or has spoken a pretty clear risk-off sign in this last weeks. So what's the trade here? Always compare your weakest against the strongest pair. If you are outside of US and if you can trade those pairs like Canadian dollar, Aussie dollar, right? Then you can do it more granularly than we can do or that I can do, because I always trade the futures and they are always paired against the dollar. But it's actually not that bad because we have pretty significant dollar weakness, right? We have spoken about this a little bit earlier. Dollar index sub 100. And what I then always do, I look a little bit on the other side, right? So if I look at this chart here, and from the G7 currencies, the Australian dollar is the weakest, right? Do we see some relief here? It may favor long in the 6A future. Also, when equities are going a little bit more risk on over the week, it should be a benefit this trade as well. On the other hand, there's the 6J, the Japanese yen. Last week, we have some news from Japan that a rate hike will maybe not happen because the tariffs are actually could have that much impact for Japan that they can't hike rates for the country over there. So that's a little bit of a problem. I usually trade then 6J if we have that much of a dollar weakness, but it's also cool for a currency trade that you have on if central bank is more hawkish, right? So next one is then the 6A. I just looked a little bit into it with all the gamma for the next expirations, which is tilted to the upside. The scale on the right chart is a little bit cropped down. Does not show you all the prices between 63 and 64. But that's the reason why I added the hourly chart of the 6A over here. And what's pretty cool is actually if you're trading forex or FX, keep it like that, you should always watch rate differentials, right? So the lilac line over there just compares the rates of the 2-year Aussie government bond versus the US 2-year government bond, right? And if those differentials are going into a direction, also the currency that you are trading should be going the same direction. But with this strong yields, because of the bond selling that we are seeing in the US, it can give a little bit, misleading signals. The 6A in the morning was already up like 0.6%, already tagged 1-day max, which is the first standard deviation of the day. Usually I would say, okay, let's fade it up there. But with the elevated volatility in FX markets, a 1 standard deviation of the day is more of a thing that should happen, right? Because the volatility is so high. And if your trade is on sides and goes in the right direction, those levels tend to get traded again. And you might see higher prices actually. Okay, so keep in mind if volatility is normal, relatively spoken, normal to the realized volatility, 1-day standard deviation is always okay to trade, but you need more volatility if you want to trade outside of those levels. So, and for today in 6A, just watching levels like 63.0, which is a core resistance out of options data. I always set alerts then in the chart, just watching price action a little bit, and plan to make entries. If this not happens, then I usually go lower. But my takeaway is always I just work with the levels over here. In the chart, there are actually a little bit too much levels. I just try to keep in mind 2 or 3 and then just wait patiently of this trade. So on the downside, there's also option matrix for all the options and all the expirations for 6A. And into the 16th, 15th, next 2 days, trading in positive gamma, which also lead to positive delta, should support our thesis here a little bit. Volatility should also come down a little bit. And that's the first thing in FX I watch for this week. But in my view, we also need equity risk on a little bit, because usually the clearest risk on, risk off FX pair is the Aussie dollar versus the yen, and make the transitions into futures trading here, the 6J has to perform worse than the 6A. We don't see this since like 3 or 4 hours, but it can maybe materialize over the week. Over to oil. Also pretty interesting, because the correlation was kind of high with the stock market. If you pull out a chart, ES, compare it with the actual CL contract, they kind of moved in lockstep. Oil did also the giga pump on the Wednesday, right? Which hit the tape like 1 p.m. Oil was up 57 to the close 62, right? That's $5 in oil. That's pretty much, if there is not some sort of COVID crisis or wars breaking out, $5 is pretty strong. In this morning, the actual CL 62.39. Do I have a chart over here? Yes, I have. So we do this afterwards, going over some other stuff. Yeah. Last week we also had OPEC news, no further production cuts. What's a little bit obviously that if we are seeing reliefs in tariff news or stuff related to that, oil should perform a little bit better. As of now, oil is still in backwardation. People that are not new to this format here, they already know this means higher volatility in the oil contract that you are trading. So oil is way more reactive to this news as well. So I always keep it in mind for the trend that may emerge. And yeah, volatility in general is pretty high. OVX is around 50. That's also pretty rarely, to be honest. And what's a little bit more important, prompt spreads on the right side. There are 3 charts. The upper chart is obviously the CL, and below the teal line is the so-called prompt spread, which compares the actual with the next in delivery contract. And if you compare the red lines, they're actually trading above the levels we have seen in the front contract before the tariff announcement 1 week ago. And the CLK contract was about $72 back then. This stuff, also in combination with the gamma charts over here, makes me lean a little bit more bullish to oil. What I'm not doing in oil, if we have already a good pump pre-market, like today, 1.3% up, trading 62.50. I would not buy those highs. Always wait for some little bit of retracement, like 61.50, but we will do it in the next chart. So what we have else here. The gamma chart over here. The left one is the one that expires today. There should be stuff in the money, 62.50. That's the level that we're actually trading right now. Also 63.25 could be some of a level today that we are seeing where the price is stalling out. That's the high from Wednesday, actually. Yeah, it is. And the 1-day max is 63.81. So give or take $64 on the day. This would be the high from Monday. Monday morning. There was also a pretty big spike on Monday morning, 10 a.m., 64 for CL. So that would be my upside target if I get something below as an entry. And I already made some drawings over here just to show you guys a little bit how I think about this stuff. Those orange line here, the little arrow is 61.50. That's the closing from Friday, settlement is also the POC from Thursday. So you're seeing I combined a little bit of stuff here, right? Not just the option levels and plain, also a little bit technical stuff, like the volume profiles. Usually gives me a better insight if the level that I want to trade is still valid for upside or downside, right? Never ever buy or sell those blindly. And yeah, that's stuff I want to see. 6150. Just setting alerts over there. And what would be some kind of present with 60 in oil? This would be a cool target to catch a little bit more upside. But to be honest, kind of looks unlikely, at least for this week, to get it, right? I mean, good $2.30 down there. If volatility in oil stays, we maybe see those tests of these accumulation stuff from Thursday and Friday down in the 60s again. But yeah, in between, no trades for me. Doesn't look that tempting. But yeah, still looking for upside in oil here as well. And yeah, just want to see if the correlation with these stock futures, equity futures, sorry, is still intact. And yeah, that was it for oil. Do we have something else? Talked about this. We talked about this. I feel I forgot something. No, I haven't. Oh, rate cut expectations. Ladies and gentlemen, rate cut expectations are up again. We have seen this movement last week as well. It was also kind of correlated with the down move in stocks. Rate cut expectations have been going up. Sulfur futures, always a market I watch and trade. And this move is still ongoing, right? So we are again battling the Fed with the rate cuts that we have seen for 25 and 26. But overall, that's it.
Awesome. Let's see. Thank you, Tim. This was amazing. And thank you for preparing all the slide for us. Was great. So guys, if you have any question, let us know. Post it in the comment. From my side, I just want to give you an update. So this week we are gonna be live quite a bit because we want to support you guys and we want to provide as much value and content as we can. So we're going to be live later today with Dan. Don't miss this session. We're going to show you some data-driven results from one of our models from last week. Then, of course, we're going to be back with Doc on Tuesday and Thursday. On Wednesday, we're going to be live again with Tim and a special guest to talk about tariff and the impact on US and China. On Thursday, we're going to have Ryan. So Ryan is an ex-market maker. We're going to talk about volatility. So for those who are interested in that topic, please come by, share a question with us, and we'll be able to answer those throughout the session. And then, of course, for today, we are going to have our live trading session at 2 p.m. So if you are a premium member, you'll be able to access this. The links are here. This is our share calendar. I will also put this in the comment and share with you guys. And basically, yes, we're going to have a lot of stuff. So we want to make sure that we provide as much value for you guys as possible. So for those who want to learn more, please let us know. Send us an email at info@MenthorQ. And then, of course, Tim, I'm going to see you back on Wednesday. And we're going to be back live on Discord as well later.
Yeah, just drop the link because I want to ask it where the economic calendar and the earnings calendar is from. It's just Trading Economics. Great guys. Leave us up over there, join them. And yes, we will see on Wednesday again. That's right, Wednesday PM.
Yeah, absolutely.
Great.
Thank you, guys. Have a good day and good luck, everyone. Happy Monday. And it's going to be a very, very big week this week as well.
All right, guys, let's have it and have a good one.